Stop what you're doing. You don't want to miss out on these 6 must-watch companies for this upcoming week. It's earnings season, baby. We're finally going to find out how well these companies have been performing and what this means for the US economy. Is it time to buy into these companies, or is it a good idea to avoid? All your questions will be answered in this upcoming video. So without further ado, let's get on with the video. Hey guys, welcome back to the channel. My name's Chris, and in this video, I'm going to be talking about the 6 must-watch companies for this upcoming week. Hundreds of companies are reporting their earnings this upcoming week, but these 6 companies have been setting the tone for a very long time. So I'm going to do my own analysis about these companies and answer the most important question every investor wants to know. Will these companies make me money? And that's pretty much the question that everybody wants to know. Is it time to buy? Is it time to sell? Is it time to hold? Is it time to go blindfolded and never look at these companies again? We're gonna answer these questions right now. But before I start, I wanna mention in this channel, I like to talk about financial independence and investments. And if that's something you guys really enjoy, make sure you hit the like button and subscribe to the channel as strength is up to YouTube algorithm. And also, I'm gonna put the timestamps down in the description so you guys could kind of see what companies I'm talking about and at what specific time in the video I'm gonna be talking about them. So guys, without further ado, let's get on with the video. So the first stock on the list is Coca-Cola. Now, Coca-Cola is a must-watch this week because it's basically gonna let us investors know how much of a demand restaurants have had and how much of an effect the grocery stores have been in. And we all know how Pepsi and Coca-Cola have been competition for many years. Pepsi just released their quarter earnings last week and they actually beat their earnings. But the difference between Pepsi and Coca-Cola is that Pepsi offers snacks and food that they sell in grocery stores. Coca-Cola just sells their non-alcoholic drinks. In their last conference call, one of Coca-Cola's executives stated that half of their revenue comes from out-of-home channels, meaning live sports, stadiums, and arenas. And lately, those out-of-home channels have been non-existent. Right now, the NBA is about to restart in Orlando, but in a closed area. So Coca-Cola doesn't have any revenue coming in from these live sports. But the surprise of e-commerce could push Coca-Cola's earnings a little bit closer than many people think. Coca-Cola's e-commerce has basically doubled in many countries, and it could potentially save Coca-Cola's earnings for quarter number 2. Coca-Cola's earnings reports is scheduled to be released Tuesday, July 21st before market opens. Stock number 2 is Snapchat. All social media platforms have gone up in value tremendously. Snapchat will potentially set the tone for other social media platforms like Twitter and Facebook. They are expected to have 239 million active users, which is 18% increase year over year. Snapchat is continuously trying to improve their platform and trying to make it more appealing for all their users, meaning more emojis, more music, more duck faces, just trying to make it more entertaining for all their users. Snapchat's only source of income is advertisement. And here's where analysts believe Snapchat will have a loss in quarter earnings because advertisers have cut their spendings on advertisements because of the coronavirus. But with 100 million more active users than Twitter, Snapchat has a really good chance to maybe even beat their second quarter earnings and make a profit. If this company beats their second quarter earnings, they're going to be putting pressure on Twitter and on Facebook. They are expected to release their earnings report on July 21st, Tuesday. Stock number 3, guys, a very interesting one, Tesla. Tesla is going to report their earnings July 22nd, Wednesday after hours. And it's going to be must-watch TV for every investor. If they have a profit and beat their earnings this quarter, that means they have 4 consecutive quarters of profit, clearing the way for Tesla to be included in the S&P 500. And if that happens, who knows where the price of this stock is going to be? Where will it stop, and if it will ever stop? Many analysts believe Tesla will have a loss this quarter with a revenue of $5 billion, down 21%. Remember, their California factory was shut down for 8 weeks because of the coronavirus. But many investors are still hopeful for this company, and this is going to be must-watch TV. This is going to be like a Conor McGregor versus Floyd Mayweather fight, but in this case, it's going to be Tesla versus the stock market. Must watch, and you got to tune in. Next on the list is Microsoft. Now, Microsoft is one of those big tech giants. They're releasing their earnings report July 22nd on Wednesday after hours. And just like Snapchat, Microsoft has benefited from the stay-at-home orders, meaning more people are playing their games because, you know, people hate being bored, so they're buying more Xbox games, driving Microsoft's revenue up. And more people have been working from home, meaning their equipment has been used more, driving up the revenue a little bit more as well. Microsoft has been one of those companies that have been really consistent, and that's the key word now. Consistency. They have been consistent in growth, consistent in potential, consistent in revenue, and consistent as an overall company. If you're not consistent as a company, those companies are going to become stagnant and never improve or grow. Now, Microsoft has been putting a lot of money into its own company and trying to have more room to go, and it does have a lot of room and potential to grow as a bigger corporation overall. If Microsoft beats this quarter's earnings, which I'm predicting it will, I see the price for Microsoft to shoot up maybe to $250 or $260 a share. So this stock is a must watch for this week. Next is AT&T. They're going to report their earnings Thursday pre-market. This is everyone's favorite dividend company, but many analysts believe and are reporting this company to have a loss for this quarter. Why? Because many stores have been closed down because of the virus, and some stores have even closed completely because of it. But many things play a factor for this company. Number one being that they are slowly but surely chipping away at their debts. Number two, they expanded their 5G networks to over 355 countries, serving 179 million people. Number three, many people are forgetting AT&T released their own streaming service in HBO Max. In the first quarter earnings, HBO Max wasn't really released yet. We're gonna have full data on how much revenue HBO Max has given AT&T. When AT&T released HBO Max as a streaming service, that basically gave AT&T another source of income on how they are gonna be making money, and not just from their cell phone plans or their contracts. Now it's HBO Max and their monthly subscriptions. On the first day of HBO Max's launch, they had 100,000 people subscribe. In my personal opinion, I believe those three key factors play a huge role for AT&T in pushing up their revenue more than people think. And it has a chance to prove all these analysts wrong. So make sure you keep watch this week for AT&T. Last but not least, and this is a stock that nobody's really talking about because the industry has been crushed, is Southwest Airlines. They're gonna report their earnings on July 23rd, Thursday, before pre-market. This stock is a must watch this week because many investors are going to have a better idea and understanding to how bad the airline industry has been. During the first quarter earnings, all these airline industries started to see a decline in March. So many investors couldn't really get too much of an idea to how of an impact the coronavirus was to these airline industries. We only had 1 month of data. Now in the second quarter earnings, we're gonna have 3 months of data just to see how bad of a loss the airline industry has been. It's not a matter of if it's gonna be a loss, it's a matter of how much of it's gonna be a loss. And Southwest Airlines is basically gonna set the tone for the airline industry to see how far of a recovery they each have. American Airlines reported that 25,000 employees will lose their jobs. This stock is a must watch, not for investors to buy, but investors to get a good idea to how much of a recovery and when is it time to buy in these companies. Investors could put their money into this company after the second quarter earnings, but keep in mind, you may not see any income or growth for many years to come. So that's it, guys. Those are the 6 must-watch stocks for this upcoming week. We are in very volatile times, and especially with earning reports being reported, prices could fluctuate up and down. So before you start investing into a company, make sure you do your own due diligence and make up your own opinions before you start investing your real hard-earned cash into companies. All right, I do appreciate you guys. Thank you all for watching. Make sure you hit the like button, subscribe to the channel. Comment down below what you guys think about the 6 must-watch stocks, and let me know what you think. And I'll see you guys next time.